3 years ago, buyers were fighting over listings. Today, boats sit unsold for months. What changed? In the spring of 2020, the rules of the boat market changed overnight. Stimulus checks landed in millions of bank accounts, and remote work emptied office buildings. Suddenly, weekends on the water were not just a dream, they became an escape from lockdowns and closed borders. Within months, demand for recreational boats jumped between 20 and 40%, according to the National Marine Manufacturers Association. Listings that would normally linger for weeks drew multiple offers in a single day. Used boat prices shot up 30 to 40% in popular segments, like 20 to 40-foot cruisers and sailboats. New boat manufacturers suggested retail prices climb too, rising 10 to 20% as supply chain shortages made every delivery feel like a lottery win. For the pandemic-era buyer, it was a race. Bidding wars broke out for runabouts, pontoons, and family cruisers. A 2019 model that sold for $60,000 before COVID could fetch $80,000 by 2021 if you could even find one. National Marine Manufacturers Association data shows new powerboat sales peaking at more than 325,000 units in 2021, a record high and nearly a third above pre-pandemic levels. Dealers, watching inventory disappear, placed larger and larger orders, betting the surge would last. Manufacturers raised prices to cover rising costs, but buyers barely blinked. The belief took hold that boating had entered a permanent boom, but the numbers told a different story. Price increases outpaced incomes, and supply chains remained tangled. By late 2022, the first signs of a cooldown appeared. The gap between what buyers paid and what boats were truly worth began to widen. As the initial frenzy faded, the logic of the market reasserted itself. Prices that detach from fundamentals never stay high forever. The correction was already set in motion. Rows of unsold boats now line dealership lots, a direct result of decisions made during the peak. Dealers who once scrambled to fill every order found themselves with 4 to 6 months worth of stock by 2025, double what was typical before the boom. This excess inventory isn't just a storage issue. It's a financial burden that deepens with every passing month. Most dealers don't own their boats outright. Instead, they rely on floor plan loans, a kind of revolving credit line that lets them finance inventory while waiting for buyers. When rates hovered at 3 or 4% in early 2021, carrying costs were manageable. But by 2025, floor plan rates shot up to 7%, even 9%, following the Federal Reserve's hikes. Suddenly, holding a $100,000 boat for 6 months meant paying $3,500 to $4,500 in interest alone before factoring in insurance, storage, or staff. For a mid-sized Florida dealer, the math became impossible to ignore. 15 unsold center consoles, most from the 2022 model year, sat on the lot, each financed at high rates. The longer they lingered, the more they cost, turning what should have been assets into liabilities. To move inventory, this dealer began cutting $10,000 to $15,000 off sticker prices, sometimes selling below cost, just to stop the financial bleed. These discounts ripple through the market, forcing other dealers to follow suit or risk being left with even older, less desirable stock. The pressure to clear out aged models accelerates markdowns across segments, from wake boats to family cruisers. This is not a story of opportunistic deals, but of institutional stress, where the first losses are absorbed by those who bet the hardest on the boom lasting forever. Used boat listings have piled up across the country, but the sheer number of options has not made selling any easier. Industry data shows that 15 to 20% of boats bought during the pandemic surge are already back on the market. In Texas, a pontoon owner who paid top dollar in 2021 now faces a crowded field, hundreds of similar boats, most with low hours, but little to set them apart. The average asking price for a 16 to 20-foot used boat has slipped from $51,000 to $48,000 in just a year, with many sellers forced to cut even further to draw attention. Condition has become the main battleground. Marine surveyors report that 15 to 20% of deals are renegotiated after inspection, as deferred maintenance and hidden flaws surface. Boats that sailed through bidding wars 2 years ago now struggle to attract offers if they show engine wear, outdated electronics, or signs of water intrusion. One surveyor describes a pattern. Buyers come in expecting value, but walk away or demand steep discounts when survey reports reveal rot or neglected systems. As more pandemic-era boats hit the market, the glut pushes prices lower, especially for aging cruisers and entry-level models. Sellers who financed at inflated prices now face shrinking equity, and many are forced to accept offers well below what they owe. Money is no longer cheap in the world of boats. By 2025, buyers face loan rates between 7.5% and 10.5%, double what many paid just a few years earlier. For a $100,000 boat, monthly payments now run $800 or more, pricing out many would-be owners. Lenders have tightened their standards, demanding credit scores of at least 680 and down payments of 20 to 25%. That's a sharp shift from the easy approvals and low rates of the pandemic-era boom. As one marine finance specialist explains, the pool of qualified buyers has shrunk, especially for mid-range models that once drove the bulk of sales. Insurance adds another layer of friction. Premiums have climbed to 8 to 12% of boat value, with older boats facing stricter underwriting or even outright denials for coverage. An insurance broker notes that claims from deferred maintenance during the buying frenzy have pushed up risk and costs for everyone. Slip fees have not stood still either. In many marinas, annual rates are up 15 to 25% since 2022, outpacing inflation. All of these factors combine to squeeze buyers and owners alike, pushing many to the sidelines and forcing the market to adjust to a smaller, more selective crowd. Stress builds first at the marinas. In the Chesapeake, operators see slip vacancies jump from 5 to nearly 20% within 2 years. Where every dock once earned steady income, empty spaces now mean up to $100,000 in lost revenue for a 150-slip facility. Fewer boats in the water shrink fuel sales and repair work, tightening margins even further. Dealers are next. Inventory ordered during the boom now sits unsold, and each passing month brings more interest payments on floor plan loans. By 2025, sales drop 8 to 10% compared to the previous year. Dealers slash prices, sometimes below cost, just to keep cash moving. Those who borrowed heavily to stock up now face carrying costs that erase any chance of profit. Private owners who bought at the peak find themselves underwater. A 38-foot sailboat bought for $200,000 in 2021 might fetch just $140,000 by 2026. Many delay selling, hoping for a rebound that may never arrive. Aging boats bring new risks. Maintenance costs rise, insurers grow hesitant, and premiums can reach 10% of a boat's value. The hardest hit are those with debt, aging assets, or high fixed costs. The order of pain is unmistakable. Not everyone loses when boat prices fall. For buyers with cash on hand, the correction opens a window that has not been seen in years. Used boats between 3 and 8 years old, many bought at pandemic highs, now list for 20 to 30% less than their peak prices. A wake boat that sold for $120,000 in 2021 can be found for $80,000 or less today, especially if the seller needs to move quickly and can't wait for the market to rebound. These buyers are not just chasing a deal, they are picking their moment, waiting for the 5-year depreciation curve to flatten out, then stepping in as prices stabilize. Owners who can handle their own maintenance also stand to benefit. Boats that scare off most buyers with cosmetic flaws or deferred repairs often sell at deep discounts. For someone with the skills and time to tackle engine work or update electronics, the savings can be substantial. Charter operators have found opportunity in the downturn as well. Some have purchased nearly new boats at 25% below original sticker price, then put them to work in rental fleets. With careful management, these operators can achieve strong returns, especially as private ownership slows and more people turn to renting for their time on the water. Across the board, those who understand depreciation cycles have liquidity, or can extract value through use, not just resale, are best positioned to weather the reset. For them, falling prices are not just a risk, they're a calculated opportunity. Today's repricing isn't just about falling numbers, it's about risk shifting in real time. As used boat values correct 20 to 40% from pandemic highs, financial pressure finds the most exposed first. In this market, knowing where stress builds is the difference between opportunity and a costly lesson. Stay informed, stay afloat.